Good morning, everyone, and welcome to the first Making Finance Work for Women thought leadership event in 2021. We are really excited to welcome you here today to discuss empowering women to build digital financial capabilities. My name is Lubasha Heredia. I'm a managing director and partner in the Boston Consulting Group, and I'm excited to be your moderator today. Before we begin, a couple of housekeeping items. First of all, please note that this event is being recorded. Then you will notice that everyone's mics are muted and cameras are off. This is intentional so that we can keep the focus on our speakers today. If you experience any technical issues, please reach out to the email address that you see on the screen and in the chat. Please note that while we will do our best to assist you, we are limited in our capacity to address issues while the webinar is running. We encourage you to interact with us by asking questions. To do this, please click Q&A on the bottom of your screen to submit questions to our experts who are standing by. And with that, I would like to introduce Mariella Iskenderian, President and CEO of Women's World Banking, to give opening remarks today.
Thanks so much, Lubasha, and good morning, good afternoon, good evening to you, wherever in the world you are. We are thrilled to see you at our first Making Finance Work for Women Thought Leadership Series webinar. As Lubasha said, I'm Mariella Iskenderian. I'm the President and CEO of Women's World Banking. And since 2013, when Microfund for Women hosted us in Jordan, Women's World Banking has held our Making Finance Work for Women Summit every 2 years. Since then, the summit has grown into a week-long series of events, all devoted to women's financial inclusion. And with each summit, it felt like more and more organizations and individuals were coming together under the Making Finance Work for Women banner to learn from each other, to solve problems together, and to renew our mutual commitment to the cause of financial equality for women and girls globally. Last year, because of the pandemic, we shifted the conference to a virtual setting. And after the blood, sweat, and tears subsided, we were thrilled with the response. We saw just how big that global community had become as we were joined by around 500 people from 48 different countries. Emboldened by this success, we realized two things. First, that we couldn't let another year pass without connecting with our growing circle of friends and allies, especially in these very turbulent times. Women's World Banking has loads of research and findings from our advisory, policy, and investments work that we really can't wait to share with everyone. And we're eager to learn from all that's happening in the wider women's economic empowerment community. The second thing we realized was that we could successfully bring the Making Finance Work for Women event to a virtual setting. So I'm thrilled that today we're launching our Making Finance Work for Women Thought Leadership Series for 2021. Over the year, we'll be sharing curated content that highlights experts from Women's World Banking as well as other organizations for a series of conversations. We're still building out the schedule of events, but some discussion topics that we're considering include gender lens investing, savings mobilization, and the importance of collecting and reporting gender disaggregated data. And of course, we'll be hosting an event for our third FinTech Innovation Challenge virtually in October, so stay tuned for those details as well. Today's topic, digital and financial capability, is so critical as we think of a future where more women are financially empowered. We'll discuss how financial services providers and regulators can effectively support women to gain the digital skills and, so importantly, the confidence to fully participate in the rapidly digitizing formal financial sector. We've just started our 2021 Leadership and Diversity Training for Regulators program last week, and many of the participants will be with us today. And I think the audience will be interested to know that this topic, digital and financial capability, was listed as the highest policy priority among the attending regulators from around the world. In closing, I'd like to thank our sponsors and supporters. Making finance work for women simply cannot happen without their generous contributions. And so I'd like to thank our advancing sponsor, Ernst & Young, and our broadening sponsors, the European Investment Bank, Boston Consulting Group, and the Patrick J. McGovern Foundation for their generosity in helping us create this platform. I'd also like to thank FinEquity as our contributing partner for amplifying these discussions to an even wider audience. Finally, I want to thank extend a special thank you to Women's World Banking's core funders, Australia's Department of Foreign Affairs and Trade, the Swedish International Development Agency, SIDA, and the Visa Foundation for their ongoing support of Women's World Banking's work. And so now I'll hand it back to you, Lubasha, to kick off the panel. Thanks so much.
Great, and thank you, Mary-Ellen. As Mary-Ellen said, empowering women to build digital financial capabilities is more important than ever to ensure that women are not left behind as the financial industry moves forward. And this panel discussion will be on the conversation on this digital financial capability and the role that it has in building this knowledge, the skill set, the attitudes that would be necessary for women customers to effectively engage with digital financial services. We'll also want to make sure that we talk about how financial services providers and regulators can more effectively support women customers to gain the confidence and skills to fully participate in the rapidly digitizing financial sector. So now I'm going to introduce each of the panelists that we will have with us here today. And I'll start with Marina. So Marina Dimova is the Managing Director and Partner, here you are, Managing Director of Design and Innovation at Women's World Banking, with the global nonprofit devoted to giving more low-income women access to the financial tools and resources they require to achieve security and prosperity. She focuses on transforming the strategic ideation and solution design processes of financial service providers and designing innovative financial solutions for women and girls. We're very excited to have you with us today. Then Julia Arnold. Hi, Julia. Great. So an expert in gender and financial inclusion, Julia Arnold became Senior Director of Women's Financial Inclusion in July 2020. She leads the Women's Financial Inclusion workstream, spearheading the research pillar as well as embedding gender throughout CFI work. Julia has more than 12 years of experience in inclusive finance, leading implementation and research projects across a range of customer and provider-focused topics such as digital financial inclusion, financial capability, and microsavings. Thank you for being here. Now let's go to Samit Ghosh, who is the founder and former Chief Executive Officer of Ujjivan Financial Services. It's a microfinance institution serving over 1 million urban and semi-urban poor across 20 states in India. Ujjivan began its operations in 2005 and is headquartered in Bangalore. The institution believes in a holistic approach to alleviate poverty and works very closely with its sister nonprofit institution, Marina Foundation, to provide services in healthcare, education, vocational training, and community development to its microfinance customers. Thank you for being here. And Catherine Highet.
Hi.
Great. Hi, Catherine. Catherine leads the digital enabled financial inclusion learning theme at FinEquity. Before that, she worked with GSMA Connected Women Program and FHI 360, focusing on digital inclusion activities, including DFS, digital identity, and gender equality. Catherine has also consulted for multiple digital development partners in the public and private sectors, such as the World Bank. So thank you, Catherine, for being here. And we have a terrific panel. So let's get started. And before we get started with our questions, we'll do a quick pulse check with the audience to see how many of our participants offer financial capability or digital financial capability programs to their customers. Could we launch the poll, please? So based on the results that I'm seeing coming in, it's about 60-40. 60% of our participants today are offering a financial capability program to the customers. That's That's a pretty good start. So now let's go into the first question, and thank you for the poll. And this question is for Julia. So Julia, CFI recently published a landscape report on the current state of the financial capability in the industry. Can you share, please, with the audience some of your key findings, and also more specifically, what has changed relative to the report that you published in 2016 on the topic of women and digital technology and capability?
Yeah, thank you, Lubasha. Thank you. I'm delighted to be here and part of the panel. So the report will be out imminently. We didn't quite make it to the webinar, but CFI conducted a global scan of financial capability innovations and interventions. So we spoke with fintechs, savings group providers, banks, MFIs, entrepreneur accelerators, et cetera. And we scanned the literature as well for updates between 2015 and now on findings around building digital capability and the impact of financial education. We were particularly interested in interventions that targeted women, as well as those addressing digital capability, since digital financial services have really taken over, and we all know how important digital skills are these days for financial inclusion. So I probably don't actually need to explain to this particular audience why we took a gender lens to our scan, but in case there's like one person still trying to work it out, I'm really going to very briefly make the case. So women and men's lives are significantly different, especially in developing contexts. Social and gender norms drive women's control over household financial resources, access to education, financial education, and inform care responsibilities and time use. So norms also inform her access to and usage of digital technology. And this reality has led to a consistent global gender gap in bank account ownership, as we all know from the Findex, as well as global phone ownership gap, which we know from GSMA. So our hypothesis is that this drive isn't necessarily about access or providing bank accounts for women. It's actually something else is missing. So when it comes to building women's financial capability, their starting point based on this reality, their needs and ability to use information differ from men. So in fact, many low-income women globally, their capabilities are tied to their households, their communities, their constraints and relationships that keep them from necessarily using the information that is provided in an education program. And these can act as a constraining force on women, muting the impact of any financial capability program that they may participate in. So in our research, we found not necessarily a lot has changed since 2016. There are more players, but really the type of interventions remain more or less the same. So we found a spectrum. There are traditional approaches, which generally are classroom education based, a group of people and a teacher sort of taking information and giving it to a bunch of students. And the way that the impact there is measured is really the number of people and bodies in the room, the number of participants. And the spectrum goes all the way to what we're calling gender intelligent approaches to building financial capability and digital capability. And in between there's a number of other types. So we've got like gender aware approaches that grapple with social norms, but they often seek solutions to go around the norms rather than kind of addressing the core issue of why that might be a reality. Like Grameen Foundation trains female agents in the Philippines, and they seek out trusted peer community members to work one-on-one with women to build their confidence and their trust, and teach with no shame involved. And that's great. Doesn't necessarily get to the issue of why women want to speak to a female agent and not necessarily feel comfortable with a male agent. So we would argue that gender intelligent approaches, and you can look at the BOMA project, you can look at BSR's HER project, which targets female garment workers, as interventions that seek to go and transform the norms by engaging household members and communities in some of the core reasons why women's financial and digital capability is lower than men's.
That's great. Thank you. Thank you so much. And Marina, I think you've also published the recent report, and it included a framework So for effectively designing that digital financial capability programs. So can you tell us a little bit more why you focused on that and what are the components of that framework?
Absolutely. Thank you, Lubasha, and really such a pleasure to be here today. And thank you for everyone that has joined us for the conversation today. So I'll start first about why digital financial capability. And really what we have seen in the past decade is that digital financial tools have grown in importance as technology becomes more accessible and connected. And yet this move to digital financial services really poses some very unique challenges for low-income women, as Julia has been talking about. Their lives and where their contexts are much more different than where men's starting point are. Just to give a context to that, from the recent GSMA Mobile Gender Gap report, we can see that women are 8% less likely to own a mobile phone and 20% less likely to use internet on their mobile device. And really this leaves them with fewer opportunities to learn and practice digital skills, be it for financial services or otherwise. And we definitely understand that digital financial services are not a silver bullet for women's financial inclusion, but we see this is where the industry is going. So we think that financial capability should evolve to include digital financial capability. So we really make sure that women are not left further behind. And what we think is that digital financial capability is a critical component for digital transformation, and the journey is not easy. And that makes it even more important to support both women customers as well as financial services providers in making that transformation on each step of the way. And this is really why we developed the framework. And it comes from years of experience of first developing financial literacy, then financial capability, then digital financial capability programs, and working with financial institutions to implement them in the field. And really encapsulates our learnings and what we've seen works to make these programs effective. So the framework has 5 main components, and quickly summarize them for all of us. So first, it really starts with identifying who we're trying to target, and really helping providers identify a specific target segment of women customers they're trying to engage with the specific program. And here we really realize that women, like all customers, are not a monolith, and you really need to be very specific about understanding who you're targeting so you can really embed into their context, understand barriers and social norms and other factors that really shape women's lives so we can design for the women customer. Then we really move into identifying a clear and focused learning objective. And we think that's really important because in order to make the message impactful, it really needs to be concrete and not cover too much. So it really can guide women towards the specific behavior we're trying to help them do. From there, we move into 2 other factors, which is when. So what is the time in the customer's lifetime journey it will be most impactful to engage her with the message so women can internalize it and use it. And then where, which is what are the right channels that will be most impactful to use in order to reach her effectively. And finally, we focus on the content, and we really here focus on how we can develop the message itself in a way that drives behavioral change. And here we've seen a whole set of behavioral principles that really help us change mindsets and work towards building new habits effectively.
Great. Thank you for this. So I would love to, before we move to the next question, to take a pulse of our audience in terms of what you are all thinking are the most critical challenges for both the providers of digital financial capability programs as well as for low-income women who utilize these programs. So if we could please launch our second poll, you will see both of the questions. and I'll give you a minute to respond. So here's what the results show. The number one most important critical challenge you all identified is limited customer awareness and literacy, about 40% of respondents. And then that was followed by lack of relevant product or channel, the cost of customer engagement, staff capabilities, and the length of customer engagement. And then in terms of the challenges for the low-income women in using these programs, the number one reason is access to devices, and then closely followed by social norms constraints and limited literacy, and then some lack of confidence and lack of relevant use cases, which I think resonates with, I see heads nodding in among our panelists, so that definitely resonates. And so maybe continue to talk about some of these challenges. I have a question for Katie. So Katie, the FinEquity also recently has written a synthesis on your discussion on digital financial capabilities. Could you please share with the audience a little bit about this research? And specifically, in your research, what were the key challenges that you found that providers face in terms of engaging women customers?
Sure, thanks, Lubasha, and great to be here. Good morning, afternoon, and evening, everyone. So yes, FinEquity is also just about to publish a synthesis on our digital financial literacy e-discussion last year, thus completing the trifecta of digital financial literacy, digital financial capability publications coming out at the same time. So we're delighted to be a part of this panel. This conversation was really born of the FinEquity community. So it is a community effort where we had, over 80 contributions from our audience of around 2,000 people last year, and that's focused around 5 enablers and 1 constraint. So the 5 enablers are literacy, numeracy, design, access, consumer awareness, and the constraint is social norms. And the way we've structured the report or the synthesis is that each enabler or constraint has a composite definition as it pertains to digital financial literacy. And then we look at the challenges from a user perspective, the solutions from an FSP or a practitioner perspective, and then have really tried to gather key resources which have been organized per enabler, and then some overarching resources. Alongside that, we have 4 case studies from Aflatun, from BSR, SIA, so Strategic Impact Advisors, and Good Return. Thinking about the challenges, and I think, there are 2 sort of categories that I want to touch on. I hear what Marina said about women not being a monolith, and completely agree. However, we do see that we still design for a monolith, and that is a real challenge that we have. Where something works in one context, we often, sort of have this knee-jerk reaction where we just try to copy and paste it, or we want to replicate it, and that's really continues to be a downfall. And so we really need to get into the nuance, get into the context, really understand what these challenges are. And I think that for me, the challenges that came up were not necessarily new, that they were just far more context specific. They were deeper. Some of the specific challenges, which I found very interesting, were around numeracy and really understanding the limits of numeracy, and the way that so many of these programs, which are designing digital financial services or digital financial literacy abilities, they design based on an assumption of numeracy. And so you have women who may not really be, what we would say was numerate, but they can remember a mobile phone number. They have a fantastic memory for, long USSD strings to complete a transaction, or to send a, request request money, request airtime, request to a colleague or a friend, but they don't necessarily understand what long digit strings look like. So this is just, you know, when you're dealing with cash, you can easily identify what, say, a 10 Jordanian dinar note looks like. You know the color, you know the shapes that are on it. But when you suddenly put that in a mobile phone, it's much more difficult to understand what 10 looks like. If you're dealing with a currency which has several zeros behind it, which is, you know, not uncommon, that becomes very, very difficult to transact and to calculate what these amounts mean. It also creates a ceiling for how much you can actually transact, because if you can say, if we're looking at numeracy and saying, okay, well, I have, you know, 10 Jordanian dinars in my account and I'm sending 3 to this friend, so therefore I have 7, that makes sense. Maybe I can do that. But if suddenly you're telling me that I have 110 Jordanian dinars in my account and you're asking me to send 33 to a friend, that is a much more complex calculation. And we're not really taking that into account. So, and one of the reasons for that is that we don't have a common framework for measuring numeracy. And I think this is really challenging, because when we say, oh no, they're fine, they can they transact in the market. That's actually a very different thing. And I should actually point out that while I might sound like I know something about this, is very much largely due to Brett Matthews and the amazing work of My Oral Village, who were really leading this conversation. And they have a ton of amazing research they've done over, you know, not just recently, but over the last decade. So that's something that we're highlighting a lot in the synthesis. And I would really encourage everyone to look at their super thoughtful work. I think that's enough from me.
Great, thank you so much. This is very interesting. And I would love to talk to you, Samit, and you're a practitioner and you're founder of Ujjivan Financial Services. So from your perspective, we would love to hear about what are some of the key initiatives that Ujjivan is currently working on that facilitate that transition of women customers to digital financial services, and what role does digital financial capability play in those efforts?
Thank you, Lubasha. We have over 5 million customers, and all of them are women. I mean, 99% or 98% of them are women. So whatever we do is for women. So, there are a number of digital programs which Ujjivan is working on, a number of them in the back end to improve efficiency, etc. But 4 of them are front-ended, and that's what I'm going to talk to you, which is customer related. One is the digital payments, which is the easiest, because, microfinance is notorious for cash. Everything is cash transaction. And about out of 5 million customers before the COVID, about 0.1% would use digital payment to repay loans, etc. And in India, we have a number of options, Google Pay, Phone Pay, Paytm, and innumerable options. So that's gone up to about 5%, during the COVID this thing. So that's like the easiest one, right? Making repayments using digital payment apps, The second one, which we were piloting and we were working on, was using QR codes to make payments. We have about 600,000 small businesses which we serve, and we piloted this QR code, scan and pay kind of thing for the customers with about 60 of them. That was a pilot. It was successful. It needed some changes because the connect was with the phone number, and now we're going to modify it, and it's going to be directly to the savings account, etc., which is much easier. So that is the second one, the QR code related, business related payments. The third one which we have is, 70% of our staff, they spend time on repeat loans to customers. So what we try to introduce with them is, they can get a repeat loan on the phone. We have call centers, and if they need a repeat loan, they know, within next round they need a repeat loan. They can just call the call center and do the transaction entirely on the call on the phone, right? Again, this was a pilot which we did. It was successful, but I think we had about 2,500 customers who used it. However, authentication and all that becomes a little bit of a problem on that, and the transaction time is also fairly lengthy. So they've tried to shorten the transaction time, etc. And finally, the one which we are most excited about is what we call the 3V mobile phone app, which is voice, vernacular, and video. Because most of our customers, as you know, are semi-literate or illiterate, and for them to use a regular mobile app becomes very difficult. So we've been working with one fintech, startup fintech actually, for two kids who just, a couple of years ago graduated from Stanford. And we've been working with them to develop this app. And sometime later this year, we will launch this app. And one of the applications of the app would be to make that repeat loan on the phone, if you use this mobile app, much easier. The authentication and all that will become so much simpler. So that is something we are looking forward to, So those are the four major customer-facing digital programs which we are doing. Of course, I must tell you, a lot of them had to take a back seat during this COVID because, we had a lot of loans, we had to give moratorium, this, that, and so people are busy really with collections and things like that. So these programs, even though are needed highly during this period, unfortunately, had to slow down during this period, and hopefully it will pick up as soon as this COVID wave is over. So that's what I want to tell you about 4 of our applications which we are doing on the digital front, which are customer facing. There are numerous ones on the back end.
No, thank you for sharing that, and it's fascinating. I'm excited about the app. Maybe building on what you just said about some of the things that you have done with your startup, I have a question for you, Marina, because you partner with multiple financial services providers that design financial services for low-income women. And so based on your experience, how do you think about some of these key challenges that these providers are facing in deploying some of these initiatives, and what are the good examples of those that can overcome them?
Mm-hmm. Absolutely. And I'll start coming back to the poll. We launched the conversation and it's really encouraging and heartening to see that 60% of our audience, I can extrapolate to the wider audience, obviously not very accurately, are already doing digital financial capability programs. This is very encouraging. So what I will probably say as a first challenge is that we're making a lot of progress in this going into the mainstream, but it's still not quite there. So one of the things we really want to focus on, and we really hope this panel and conversation that will come subsequent from it really can drive that impetus to really position financial capability and specifically digital financial capability as a cornerstone for what financial institutions do in order to engage their customers with financial products. Now I'll focus on the institutions that are already trying to do that. And here I think we encounter a couple of challenges that I wanted to talk about, and I'll talk a little bit about how we help institutions to help reach those challenges. So the first one is that we often see financial institutions aiming to solve too big of a problem. We understand that financial capability is embedded in so many parts of women's financial lives. It comes with education, upbringing, social norms. So starting with a goal of, let's say, improving women's literacy or literacy gaps and numeracy gaps might be too much of a topic to tackle for one financial institution at one time. And how we tackle that and kind of guide financial institutions to deal with this is to narrow down the approach and really think about it as an incremental work where you don't need to have one program that solves all the challenges, but focus on a couple that you can solve now. And once you can build on them, you can address others, but really trying to get very specific of what you're trying to solve. And that also affects the way you teach the content. It could be a lot more focused, which from a behavioral perspective, and behavioral scientists at heart, really allows us to achieve stronger results. The second one I really wanted to talk about is a tendency for financial services providers to do standalone programs. So financial capability or digital financial capability being its own program, not related to their products or services and the broader business case. And we really see this not being very effective in the field. There is a lot of evidence, Julie, I'm looking at you and Katie as well, for that really not really getting us to the end goal we want to do. And our approach in partnering with financial institutions is to really help them embed digital financial capability within the products they roll out. So for all of our financial solutions, digital financial capability is really a critical, indelible component of the solution itself. And if the solution is, savings product that's helping build a regular savings habit, or it's an insurance product, we really map all the capability components that really need to be there in order to empower women to use these products and just embed it into the way the product is rolled out. Like, think about a product always has a marketing strategy, a channel strategy. Our perspective is it has to have a digital financial capability strategy as well. And that's what we're trying to do with our programs. And then finally, I'll talk a little bit about the business case. And I think it really comes back to that standalone mindset for the programs. We find it hard for financial institutions to sustain these programs if they're standalone, because it's not very clear what the business case is for doing them. And our approach to really tackle that is to really think about how financial capability drives customer behavior and how that changed customer behavior actually drives business outcomes that are priorities and really key indicators for success for the business. And making that connection is incredibly powerful. And we not only do that, but really engage the key stakeholders in the executive team of the financial institution to really showcase that arc, to showcase the connection, so we can have buy-in for the financial capability program and sustainability over time, which is another thing that's very important. We don't want programs to be there for half a year and then gone. They're really part and parcel of how we can serve customers in general, but in particular women customers. And that business case is so critical in order to secure that buy-in from the executive team. So I think both making the case and being able to quantify it really helps to do that.
This is great. Thank you. And Katie, a question for you based on your work with the FinEquity world. Could you please share a few examples of successful programs that have been particularly effective, and what do you think made them successful?
Sure, thanks for that. So, I mean, I think that I completely agree with what Marina says about sort of standalone examples of efforts to address digital financial literacy. And it's not even, sometimes it can be just with one particular market or one particular segment of who it affects. And so one example that we looked into, and we have a case study from in our synthesis, is that of BSR and her project in Bangladesh. And I really liked this approach because it was holistic. I mean, it addressed, it was working with garment workers in Bangladesh, and it was, helping, it was trying to digitize their salary payments. But instead of just working with the garment workers themselves and helping them understand the value and functionality of payments and using mobile money and e-wallets, etc., they did that. They had quizzes and games and sort of like a multimedia, multi-pronged approach to demonstrating, why this could be useful, why this was better, and how to do it. But they also worked with the factories themselves and with the managers, and they helped them set up the payroll. They helped prepare the workforce for digitization. They did gender sensitivity training, and then just payroll coordination. So I think this seems quite technical or practical, and I'm not quite sure why it hasn't occurred to people or to organizations that this is such a big piece of the, big piece of the solution. We can't just sort of put all of the onus on women to do the learning. There has to be, it has to come from both sides. And, the thing that I really liked about this is they went further to work with the community, and BSR worked with the managers and the garment factories themselves and asked them to provide the workers with a letter explaining why they needed a mobile phone or a SIM card so they could be paid. Because there are, lots of very restrictive social norms around women's mobile phone ownership and usage. And so there are certain assumptions and, in some cultures, some societies that, about what a woman with a mobile phone is actually using it for. And this, really takes the burden off the woman to kind of justify or have to get around that by saying, listen, like if your wife, daughter, other family member doesn't have a mobile phone, we're not going to be able to pay her. And then suddenly there is a very, very tangible reason for her to be allowed to have one. And I think more than this, they measured it. So we've got some really clear results, which is fantastic and not as common as I think we would all like. So we can, when you measure it, you can really see what works. And they noticed that 21% of garment workers started saving. This is pre-COVID, which is obviously enormously useful for garment workers' resilience during the pandemic. And they also saw a 19 percentage point increase in women reporting that they were making joint financial decisions in the household. So from an empowerment perspective, that's very powerful. So I think it's just, as Marina said, it's not just focusing on one sort of piecemeal effort, and it's not just, and this is a big effort. Don't get me wrong, but it is looking at the entire ecosystem. So what is enabling and constraining a woman to be digitally, financially literate or capable? Because it's not just her own skill set; it's bigger than that.
This is great. Thank you so much for sharing. It's a powerful example and makes perfect sense. I would love to ask about something that's come up in earlier conversation and around the business case, right? So Samit, from your perspective, or I guess from the perspective of Ujjivan, how do you think about the business case for engaging women customers with these digital financial services and making sure that they're successful and empowered? How do you think about that?
Thank you, Lubasha. First, let me tell you, if you take that, you get the phone repeat loan on the phone, and we make it effective, 70% of our field loan officers' time actually spent on this, giving them repeat loans. But if the customer can do it on their own using the phone with the 3V app or whatever it is, you can imagine in terms of productivity, the impact of that, That is from our perspective, but from the perspective of the customer, I think it is a tremendous empowerment, for them. Because, I always find, and I feel queasy actually, because the customers are always so grateful to us to give them the loans. I don't know why they should be grateful. We should be grateful to get their business, but they're grateful, and they are in awe of the loan officers, etc. But if they can get it on the phone, then that gives them tremendous empowerment, The third thing is, again, on the loan, I'm just on this repeat loan on the phone. Often, because of the cycle of the meetings, customers have to take a repeat loan when they don't need it, But when you can do it at any time on the phone, then the cost, actually the real cost, comes down for the customer because they will only take the money when they need it, Other thing is, of course, this whole digital payment during COVID times, it's so much safer to make all these digital payments the same. And if we can digitize these business funds transfers using QR code, that already has a tremendous impact in our balance sheet in increasing the current and savings account balances for us. So those are, I think, a few reasons I can cite for this thing is good not only for us but also for the customer.
No, this is fantastic. And I think somewhat related to that, but one of the topics that we've talked about, and a couple of you mentioned it, I think Katie and Marina, you both mentioned it. So it's a question about how do you measure the effectiveness of these programs, right? And so, Julia, could you please share your thoughts on how do you think about that? And also, what is the role of policymakers, regulators, donors that can ensure that providers are measuring the effects in a good way, both short-term and long-term?
Right. Yeah, no, this is critical. Measurement is critical, particularly because we're involved in behavior change, right? So that's sort of the ultimate goal of building capability is seeing behavior that encourages long-term financial health and financial well-being. So we can't get away with not measuring what we're doing, and it's exciting to hear Ujjivan sort of really make the case that this is good for the business as well as the customer. So so tracking customer progress and tracking behavior changes is an absolute must. And critical to measuring this change is gathering really good, excellent data. And that includes sex disaggregated data. And I'm sure that everyone on this webinar has heard lots of people talk about sex disaggregated data. And it's because by and large, it's just not currently collected by providers, by fintechs, by policymakers, which is, this is not always necessarily very simple, but so powerful. So during our global scan, our research, we found very little sex disaggregated data. There were partnerships with fintechs and providers that simply didn't look. And the incentive structure for providers to really look at men and women and compare isn't necessarily there. So so policymakers have a really key role in doing that. But without sex disaggregated data, we don't actually really know what works well for women compared to men and what doesn't. And without this benchmark, our approaches to financial capability are kind of like flying blind. I mean, we have some good senses, and maybe an organization over here and there is collecting data, but really, on the whole, globally, we don't really know. So policymakers and donors play a really key role in measurement. Donors can require grantees to gather sex disaggregated data. they can make that a stipulation. Policymakers can require banks to collect sex disaggregated data on all of their customers. They can make that a requirement. I'm sure we're all familiar with the case of Chile, which collected sex disaggregated data on banking sector customers for decades. And it wasn't an effort to get to know women or be gender forward. It was really just a matter of like improving efficacy of banking products and services. And what they found over 2 decades is that, you know, women were excellent clients. Their repayment rates were great. They saved, but they wouldn't have had those insights if they hadn't sex disaggregated their data. So policymakers and donors have a really key role to play here. And they also have a key role to play in pushing for the case of shifting away from business as usual to really building a long-term relationship with their customers, with their female customers in particular, understanding their particular needs and building their digital capability, which we at CFI would argue should be part of any financial capability project, even if it doesn't have a digital component, because that individual is going to go out into the world and interact with digital financial services, even if it's not your own. And so as part of building that capability, understanding, trusting, having confidence with the digital technology is key.
That's excellent. Thank you so much. We're getting to the end of the sort of questions that I've had for our panelists, and I know the audience has a number of questions. But before we go there, perhaps one last question for all of you is: could you please share with the audience one thought, one idea, one takeaway that you would like the audience to remember from today's conversation? And if I may start with you, Marina.
Absolutely, thank you. And I'm going to duck the request. So there'll be 3 very concise, short pieces that I would really love for our audience to take away. The first one is that digital financial capability programs are not nice to have. They are critical, they are must-have, and they need to be embedded within financial products as financial service providers and regulators are thinking about rolling them out. Second, doing digital financial capability programs makes business sense and can positively affect the bottom line of financial institutions. And thirdly, that is not the only reason why we need to do them. They're actually such a critical pathway to women's economic empowerment, a goal that all of us in this community really aspire to achieving. So that's my 3 short takeaways. Thank you.
Thank you for sharing that. Julia, would you like to go next?
Sure. I'll share some key messages from our research, which is coming out soon. So first, just to echo Marina's point that digital capability is a prerequisite to financial capability. We can really no longer think about those things as separate. They are truly together. Next, some of the best practices we saw in our global scan of what's going on in terms of women's financial capability and building that behavior change is really leveraging trusted peers and existing agent structures to build confidence and trust. Women's access to technology, their comfort level with it, their numeracy and literacy, as we talked about, tends to make interacting with that technology a little nerve-wracking. So having an onboarding where they can mess up and it's okay, and they can try again and it's okay, it's really, really important to then them wanting to try it again and then engaging in other types of services. And again, I'm just gonna really hammer that sex disaggregated data point home, segmenting our clients, not just by sex, by livelihood, by your urban, rural, by, women are not a monolith, really understanding what works for whom and why really helps us understand, learning and use patterns and helps us create better interventions for the customer, which can only be good.
Excellent. Thank you, Julia. Samit, would you like to go next?
I have had a long banking career, started in 75, where the technology was NCR ledger machines, where on the ledger people would put their, account balances, etc. Then, of course, as technology, computerization came into in banking, and then ATMs, launching ATMs. I've launched a lot of ATMs across the world in different countries, including Bangladesh. The first ATM, when they thought this was some magic money printing machine, people would crowd and stand around the ATMs when the cash was coming out, and then to the mobile phone, etc., which is now. One thing my learning has been, we think that poor people, illiterate people are technology averse. That is absolutely wrong. The poor people and the illiterate actually need technology for their services, because they cannot access the personalized services which the rich are provided, So they need all these services, and they will, adapt and learn very fast as long as it is useful for them, So that this is my take, after so many years of, launching technology from NCR machines to ATMs to mobile phones,
Totally. Great. And Catherine, what would you like to share with the audience?
Sure. So I think, what has become clear is that there have been lots and lots of efforts, big efforts, small efforts in recent years to address digital financial literacy, digital financial capability. But so often they're focused on the sort of the quick fixes or the low-hanging fruit and these sort of one-time things, which are sort of easy for the financial service provider, easy for the practitioner, something that is sort of flashier than perhaps substantive. And I think that we need to really move away from that and to understand our context, because the quick fixes, they should be for the client, not for us. We need to do the research. We need to understand the context and really sort of, instead of making assumptions and copying and pasting, we need to understand what what reality is, for the rural agriculturalist who lives in, the copper belt of Zambia and gets to go to the city once a year, but has a mobile phone she uses, once a week to call her son. What does that mean? Like, what does digital financial literacy mean for her, and how do we improve it?
Great, thank you. Thank you for sharing. Great, so with that, let's move to the Q&A. We have lots of questions for all of you, so I'm excited. And I'll start with the first one, which is a very good one. The question is, I think, and I will read it, I think FSP often reduced digital financial capabilities to digital financial literacy, yet the first concept is a lot broader, as it encompasses aspects related to skills and knowledge, but also access to markets and networks and marketplaces, training, coaching, you name it. Would you have examples of providers who have gone beyond providing only digital or financial literacy programs?
Yeah, I can speak to that from our global scan. You're absolutely right. There's a glut of financial education programs, or it's just information conveyed, or building financial literacy, which is sort of again, a really individualistic skill set. And building financial capability is really, we're arguing, really a community-based, more than just an individual, because of the way that skills and knowledge can be constrained by others. So there are a few. It's not very popular yet. We're hoping for it to take off, but building financial capability. So the BOMA project, which works in the sort of northern arid regions of Kenya, they had a program where they were building digital capability, and they were using IVR as a way to encourage women's knowledge building and behavior change. And women were really uncomfortable with figuring out how to access the message and listen to the message. And what they found was what they needed was a peer who understood and who looked like them from their community, understood how to use the phone, understood how to, you know, sort of access and engage with the information. They sat together, they worked it out. And then of course, this extends into the community, right? This extends to the household and the rest of the community in terms of the information, being able to utilize the information. And the BOMA project works with all of those members to ensure that that information is used to make people's lives better.
No, great. Thank you.
Can I just add to that a little bit?
Please.
No, it's a really interesting question, and I you know, as per Julia, I don't think that we've explored it enough. But I think that, you know, when you really dig into the use case, you sort of understand, you know, what the hook is, or ideally you understand what the hook is for the user, what is going to make them want to use this, you know, this financial product or service. And that sort of bit that then can start to drive itself, because if you get the use case right, if you understand what a woman's wants and needs are, instead of sort of assuming that they are going to be to, you know, send to pay school fees or whatever are our sort of commonly trotted out solutions or ideas, then it, you know, it starts to drive itself. You know, I think that the core tenet of behavior change is that you know, you have to want to, you know, you have to see the benefit and the outcomes. And so if we sort of start, in order to change your behavior, so if we sort of start from that point, it becomes a lot easier. And I think I should add to that, just when we think about the end goal isn't financial literacy. The end goal is not, you know, for people to be able to use a mobile phone to transact. That, you know, that's just a vehicle for people to feel empowered to live the lives that they, you know, they imagine, to live the lives that they sort of see value in. And I think that it's really easy for us to sort of get stuck along that pathway and think that the end goal is indeed, you know, for transactions to be up and more than, you know, once every 30 days. And if we can start at the other end and understand that what it's going to be. Is it going to be a health initiative? Is it going to be sort of training or entrepreneurship opportunities? So it really, you know, it really comes back to understanding the context, in order to do that, you have to do the research.
Thank you for sharing that, Katie. Go ahead, Marina.
If I can make only one more point on this, and comes back to what Julia was saying with the example with the BOMA project, I think another piece that really elevates financial literacy into capability is really building skills. And when we know that we are trying to teach new things, I think the role of who actually poses that information and engages with the woman customer is key, and really thinking about the holistic ecosystem they live in and who might be, you know, the best role model to bring that message along is really important. And here, I know we're talking about digital financial capability, and that probably means going digital for everything, but we have seen, especially for women customers, that in that adoption phase, it's really important to have a human touch and interaction. So thinking about who these people are, that they can play that role of welcoming women and helping them learn something new, which can be sunsetted. I mean, the end goal is probably self-service and doing it on your own, but you really need to invest up front because it is a big step. And we all know in our own learning journeys that we had role models and people to help us along the way. So the analog really stands here as well.
No, that's a very good point. And another question is more.
I just.
Sure.
Lubasha, I just had a point, you know, something which I wanted to try, but I never could, because, you know, all of us of advanced age learn all these digital new, you know, gadgets, etc., from the younger generation, from our children, from our grandchildren, etc. And I always wanted to do an experiment where we train the children of the family, you know, who would then go and teach their parents and grandparents how to use this thing, because they are so digitally savvy, you know, they learn so fast. So you can train them very fast. And then, you know, I mean, the parents and grandparents are also very open to learn from them. So that is something I always wanted to try, but I could never do it. But I don't know, someone somewhere should try it.
Yes, that definitely resonates, and you can see everyone smiling, as we probably have our own personal examples of that. Great, so I wanted to go back for a second to the business case, and the question is, how are these providers integrating digital and financial capability programs as part of their customer value proposition and the business model? And is there evidence that how such programs can help support things like client acquisition or retention strategies?
I can share an example from a project we did in partnership with Dutch Bangla Bank in Bangladesh. And really the interesting starting point here is that it was not a digital financial capability project. The goal was actually very business oriented. It was to drive reactivation of accounts for women customers that had the account but were not using it for anything else than cashing out their salaries as factory workers. So we started with the business case, and I think through the research, and again, thinking about this women intelligent, gender intelligent approach, through the research, what we discovered is, amongst other things, women customers really didn't know what else to do with their mobile wallet, because the only thing they were taught when the account was open for them was to cash out. So they were doing the only thing they were doing. So from, you know, a very business, you know, objective for the project, what we realized is that digital financial capability is the key to achieve the business objective. And what we eventually did was creating a learning by doing program that teaches women customers how to do other transactions. And here, as Katie was saying, the importance of the use case is critical. We identified that most of these women are migrant workers. They send remittances home on a monthly basis. So this person-to-person transfer was a use case they were already doing, but doing over the counter with agents. So they will get their salary, sit on a very long line to cash out their salary, then sit on another long line to talk to an agent to send the money home. Whereas they could have done this with, you know, a few clicks over USSD on their own phone. So we used peers, so factory workers that sit on the factory floor with the customers to teach them how to do that simple transaction. And it would really come back to kind of what this was able to do. We were able to increase the likelihood for a woman doing, for a women worker doing a self-initiated transfer by 76%. And not only that, but we were able to quantify that the cost of putting this initiative on the ground was only a quarter of the projected revenue for the bank. So really having these business case metrics was very important to really showcase how this digital financial capability program can serve concrete business needs, bring profit to the institution, but not only that, really create a sense of empowerment and confidence into the women users that now feel really good about themselves because they can do something on their own they weren't able to do before.
And just to illustrate, sorry, Julie, you know, how important it is when you sort of you know, understand the user when you digitize, and you know, you could sort of see that what the needs of your specific client in Bangladesh were there. Marina, you know, a similar initiative took place in Papua New Guinea a few years ago in digitizing electricity bills. So previously you would have to go to town, you would have to queue for several hours to pay your electricity bill. And then the electricity company digitized it more or less overnight, and think, assuming this sort of great efficiency for everyone and the amount of time that they would save. But what they hadn't realized, and they hadn't really done the social research on this, was that was the one time that women could leave their villages every week or every month, and without seeking permission. And then they got there and they would socialize with their friends in the queue. So they were queuing, but this was actually their outing to town. And when they observed this, they noticed that sometimes when people got to the front of the queue or near to the front of the queue, they actually returned to the back of the queue so they could spend more time socializing with their friends, because that was their free time. And so understanding, what people's wants and needs are is pretty crucial here, because they just didn't see the uptake of digital that they had anticipated, because what I might prize, which is efficiency, is not necessarily universal.
Yeah, totally. And I feel like we have countless examples of providers trying to increase efficiency, and women not necessarily going along with it for a variety of reasons. And, the normative reasons for constraints on women's time and ability to socialize in their daily life feed into why standing in line is a completely enjoyable prospect to them. I'm trying to think of an industry or vocation or anything where understanding the customer's needs and investing in the customer and their journey is not worth it. And I can't think of one. And we are a little foaming at the mouth for a business case, and I get it. There are plenty of actors where we need to make that sort of dollar sign clear for them. But I do want to make the case for just listening to your customers and having a relationship with your customers that can only be good long term for them and for your business. Thinking about not just retention within that individual, but perhaps the household, perhaps the community, perhaps the next generation, creating that long-term relationship is a net positive for a provider. So that upfront cost may seem overwhelming, and we're not saying transition immediately, change everything you're doing, but, start making some baby steps toward that, understanding your customer and what they really value today.
Great. And I will move to the next question, which is, how can men and fathers, husbands, and in general men help women acquire some of these capabilities? How can they participate in that process? How can they partner with this financial service providers or anybody else in the ecosystem to sort of facilitate this process?
What is the question, Lubasha? How can husbands help or something? Is that the question?
Yes.
Okay.
I think the BSR example is a good one. By providing that letter to families explaining exactly why women needed a mobile phone.
There's another example from our global scan, a fintech in India called Kaleidofin, and it's a really interesting business model. And if you're not familiar, Google. They'll come up in our paper as well. But they provide sort of a single product that embeds multiple kinds of savings products as well as insurance, as well as multiple kinds of insurance in one product. So that the sort of mental capacity of really any of us, honestly, a mental customer is sort of met without having to think of adding, multiple products to their ledger. Anyway, what they do is they actually have a two-part onboarding where they partner with an MFI and they meet up with a microfinance group, they pitch their product and explain it. They give information like pamphlets to the woman and say, take it home, talk to your husband, talk to everyone, your extended family that lives in your household, your community, have a conversation about whether or not this product is right for you and why, based on all the information that not only we have just conveyed to you, but we have in this pamphlet. Come back, we can answer any follow-up questions. And if it seems like a good fit, we'll sign you up. And that does elongate the onboarding process, but it brings everybody in understanding that it's not, financial transactions and decisions are not made by an individual. They never are. Even myself, my husband and I talk about what we're going to invest in all the time. So understanding that it's not necessarily up to her, and that engaging in the relationships in which she engages in leads to a positive impact on everybody, and even perhaps giving her more decision in how that money is spent.
Great, thank you. We have a very interesting question here. I'll read it. I'm hearing two different conversations. One is on research and behavior change, and another one is on successful business models and businesses that have competing pressures where to put the resources. So these two are not always directly compatible. Is your view that these changes in government regulation incentivize or make this happen for providers? Can you speak a little more directly on how policy or regulatory reforms would do this for providers that have competing pressures to keep the lights on?
I will start the conversation, but I would love for everyone to chime in. So I think we can look at these as competing pressures. One way we've thought about our overall design process in the way we work with financial institutions is that what we're trying to design for is an intersection. So it's a win-win on both ends. So designing for the women customer and designing for the business, and finding that intersection where they're not at odds. Because if they are at odds, the program most likely will not be successful, the product will not be sustainable, and we're not going to achieve the end goals we're aiming for in the long term. So really looking at sustainable solutions, taking into account the business considerations, taking into account the women customer considerations is key, because if we don't do that from the start, it's not going to be effective in the long term. So this is still the view on the ground for providers. I think what regulators can do is really draw the link between how capabilities can really help the industry thrive, and give some guidelines for how financial services providers can do that. One, and two, give some concrete requirements for what providers need to do in order to serve their customers well, like collect gender disaggregated data. So I think regulators definitely have a very strong role in setting the stage, setting the ecosystem and the expectations for financial services providers that can help us move along that path. And so do funders. So I think these two players really can help move the dialogue and find ways or help financial services providers find ways to find the win-win.
Yeah, I think it's interesting to position those as two different conversations. I would say that they're really connected, and the policymakers and donors can lead on partnerships and with grantees who can gather the evidence necessary to make informed regulatory and policy decisions around, how best the financial system and financial providers should be, meeting the needs of their customers. And if those are, as Marina said, two different conversations, and that's not going to lead to good outcomes. It's really, I kind of feel like it's on the onus actually on regulators and policymakers to do the work and lead based on the evidence they're seeing in country or elsewhere?
I have a very simple sort of point of view. I think research and understanding the customer needs is critical for the success of the business. They are not in conflict, Secondly, as far as the regulators is concerned, I think they should look at customer protection and facilitate the process. And they should not design the product. And in India, we've had a lot of products, not digital side I'm talking about, but banking products, especially for financial inclusion, which have been designed by, bureaucrats, well-meaning bureaucrats. I mean, I'm not saying that this thing, but when you actually practice it in the field, it's a total disaster, So I think the regulators and the government should make sure there is customer protection, that is not compromised, and to facilitate the whole process, to make it easier. And market research and understanding customer need is fundamental to the success of the business. It's just not in conflict. That's the way I see it.
I would only sort of add to what Samit and everyone said is, just to kind of sum up and say, there's no business case for a poorly designed or an ill-fitting product.
Thank you for sharing your thoughts. Unfortunately, I have a lot of more questions on the chat, but unfortunately, we have to wrap up. This was a wonderful discussion, and I really want to thank all of our panelists today for contributing and joining us. I have taken notes and am taking away a lot of thoughts that I heard on, how to appreciate different needs for different segments of women, how to make sure that this isn't a standalone thing, but it's integrated in the broader ecosystem, how to think about numeracy and literacy, but think broader than that as well. The measurements and the idea of measuring the effectiveness of some of these programs, thinking, starting small, being very focused, understanding what, when, and how you're trying to solve, and kind of going from there, how that fits into the business case, and how we can engage with the broader community to help facilitate some of that process. Is what I'm taking away, and I'm sure there's a lot more. So thank you again so much, all of you. It's been a great discussion. I would love to introduce Eva Johansson, the lead policy advisor for gender equality, who will give us some final thoughts.
Well, thank you very much. And it was a very interesting session. And thank you, Lubasha, also for the excellent moderator. And to you, Women's World Banking, for having invited me also to give closing remarks on behalf of SIDA, which is the Swedish International Development Cooperation Agency. And this is quite a significant event because it's the first event in this Making Finance Work for Women Thought Leadership series, and the topic is really very timely. And as we have heard today, financial inclusion is becoming more and more digital. And to ensure that we don't leave women behind, we really need to support building digital financial capabilities. And this is particularly timely as we are getting through the pandemic and we recover and we rebuild and transition into a more sustainable world. Digitalization is really something that can help us get there. And the pandemic has also revealed I would say the deep digital divides that exist in our world, and some of them we've heard about today. And we all know also now that the digital divide is also a gendered one. So we must really continue this work that was discussed today towards ensuring that we have inclusion for all. And as we also heard, that women are less likely than men to have access to financial institutions or to have even a bank account. And women also often lack credit history and the mobility to go to the bank. So it really has digitalization and technological development has great potential to increase women's economic empowerment and financial inclusion, but it really requires that women have access to products and services. And this, as we have seen today, really depends on so many factors. We have heard social norms, the opportunity and access, capacity and skills. I would also like to emphasize two aspects here, which is the affordability and the linkages to poverty. Poverty is really more widespread and deeper among women, and is a serious barrier. And if we are increasing access to digital banking and banking services, they really have to be accessible and inclusive. And also the relevance, so the products and services must be relevant for women. And women, as we know, they are very diverse. They live in rural areas, they live in urban areas, they're different ages and different needs. So that, of course, has to be included when developing new products. But we heard today from the research and the practitioners, and one of the conclusions is really that we have to continue exploring the variety of contexts in which women live. We need to understand their needs and how to support them in the skills building and empowerment to really expand their opportunities. And Sweden has, and SIDA has, a very long-standing engagement in supporting gender equality and women's empowerment. And we have, in fact, in our Gender Equality Action Plan, we are focusing as one of the key priorities on women's economic empowerment and financing. And digitalization is an integral part of this approach. And we are also, as Sweden, co-leading the Global Generation Equality Action Coalition for Economic Justice, where increasing women's access to financial inclusion is a priority. And I would like to just highlight also that Sweden is a very proud partner of Women's World Banking, which is one of the key organizations and networks that we see as contributing to financial inclusion. And we are also quite happy to work on the intersections between different areas as women's economic empowerment, ICT, and private sector development. And in the long run, it's really about sustainable development and inclusive development. But I'd like to end here by also thanking the speakers. And thank you again to our excellent moderator, Lubasha, and also to the audience, of course. We have had a quite big audience here today, so I think it's a good sign that we are on the right track, that we are discussing the right issues, and we need to continue this conversation. The recording of this learning seminar will be available shortly after the event, and you will also receive a link in the thank you email that will come soon, and you will be able to log in and see this again. But you should also check the website of Women's World Banking to find more details about the upcoming Making Finance Work for Women Thought Leadership webinars. And you can also check the Twitter for the latest update, and don't forget to tweet yourselves. And thank you again to the audience for joining us, and thank you to Women's World Banking for organizing it. And I would like to hand over now to Women's World Banking and the final word. Thank you very much.
Thank you so much, everyone. Have a good day.